Good evening. Ira Epstein of Linn and Associates with your ETF Spider wrap-up. Sometimes I call it Spider ETF wrap-up. And this is for Monday night, and we are now at August 24th, 2020. You know, the one thing that's a given is almost every day the stock market tries to rally. We get a few breaks, but this market just keeps trying to rally. Nothing grows to the sky. I've heard it, but you have to admit, it's just relentless. Now, as the market's going up, the one thing we keep hearing, and I'm paying attention to it also, is the breadth of the market's getting smaller and smaller. As the best rise in this tech scenario, markets that it's carrying with it are slowly dropping away, some of them. So we'll see what happens here. Interesting time. When we look at foreign currencies, you've got the symposium starting Thursday in Jackson Hole, where the Fed, Casey, the Federal Reserve out of Kansas City, holds their Jackson Hole symposium. It'll be virtual this year, but it's still going to be there with all the central bankers. And that's where we're going to hear monetary policy. Dangerous time for monetary policy. You got to worry, what does it mean for TLT? If the dollar goes up or down, what does that mean for the metal markets? When we take a look at the tech sector, again, I left a gap in here. You have not had what we call a breakaway gap. Or you could, some would call this a breakaway. I could call it that. The runaway begins here if you had a gap and not fill again like that, and then an exhaustion gap. Those are the three typical gaps in a chart. And I can label that first one the breakaway. That would be the right chartist word for it. The trend is up. We have a pattern of higher lows, higher highs, and a new all-time high. In addition, the market keeps staying over what I call the line in the sand, the 18-day average of closes, and it even hasn't hit it since the very end of July. It just keeps going to higher highs. But we got to a number today that I believe is going to cause the market problems. The first time you hit Bollinger Bands, after you haven't hit them for a while, they prove problematic. They have in the past. I have no reason that they won't now. And the rationale is the algorithm adjusts itself to keep the market trading within it 95% of the time. So I'm looking for the resistance right through there. That does not mean I'm bearish. I'm looking for resistance now to show up in the market. And momentum, we have my strongest technical tool called the embedded reading. It's still fully alive and doing well. SMH is nowhere near up the category of XLK to the upside. A lot of people say, oh, this is the little sister. It's not. And it's caught in the middle of no man's land. You have a lower low, a higher high, narrowing Bollinger Bands, and a market that's lacking conviction up or down in the momentum. I see sideways there. In the industrial sector, Spider XLI, the market has had a pattern of lower highs. You can see that, and the lows are lower. If we go back to the last rally high, right here on this day, 77.84. Today was what? 77.83. So it hasn't been taken out. You know, could. Let's assume it is. You'd still have a lower low, higher high. The bias has stayed up this whole time. You've stayed over the 18-day average, but the resistance is crystal clear, to me at least, at the upper Bollinger Band. The energy sector, if you get my futures video, I have been telling my traders, while this is going on in futures, stay away from them. Both in the Brent and the WTI crude, this is a mirror image of it. Just take a look. You have not broken out up or down. When it does, I'm going to get very interested in the market. Now, which way is it going to go? Down would mean maybe we don't get any breakthroughs in COVID. Up would mean things are getting better. Who knows? And better being we're solving the issue. In QQQ, you hit Bollinger Bands and you set back. You're hitting a Bollinger Band, I'm looking for a setback. Until this number's lost, the red line over 80, I look for this market to be very well supported on the breaks. On the emerging markets, I think you're caught in a bit wider of Bollinger Bands, and I don't expect the market to be able to really build on anything to the downside at this point under 62.67 to 62.48. I think that's going to be important low. Why? The markets took its time to get over that number, and as you can see, it is a moving average that stays in place for a long time. So I think that's going to tell us some friendliness. In the gold market, this is the flush out. Everybody that came in and just said it's going, I got to get in every day, well, they've given back a chunk of money. And what are we doing? We're not trending. This market has already come from the 193.86 down some, I don't know, 8% or so, 9% to the 180.47 level. Are we trending? No, you got a higher high, lower low, and you're oversold. GDX, the same thing. And what I said last week, I'll stick with. But last week I was saying when the market was doing this, folks, if you're going to trade, the strength isn't in the miners just yet. It's still in the metal, and that proved to be all right advice. Actually, this chart turned bearish. You have lower highs, lower lows, until you take out 42.10, wherever that 18-day average is. I think the pros will sell it, looking to see if they can push the market down to 38.75, but over 42.10, I think they clear the deck. In TLT, I am not looking for much beyond the 18-day average, but do I want any part of this market in front of the Kansas City Jackson Hole Symposium? Not in the wildest dream. Same in the currencies. Why would you trade in front of that? So if you were to ask me tonight, what am I saying to you? Put your hands in your pocket with one exception, and that's been stock indices via the ETFs, via whatever which way you want to go. But the other markets, they're sort of in the middle of no man's land. You know, whether you're a futures trader, SPDR, ETF, the concepts of trading don't change. A chart is a chart at the end of the day. And when you look at them, do you know what any of these things are? If you don't, you should learn them, because traders are using them in SPDRs and ETFs. As you can see, the money flow index, the rules for bottom fishing, how do you optimize stops. I do all that already in my charting course. I do it in practice, and I teach how to do these different things. But here at least is a great introduction, I think, to give you the basic idea, and then you keep running with that down the road. Great graphs on this. I think a fabulous explanation. How do you get it? And it's free. Go to our website under free offer, sign up for whatever you want there, and we'll get it in your hands. I'm Ira. You have a good day.